Okay, guys. So Bitcoin fell away from the apex. It could not get back inside here. That was the kicker. You know, if we got back inside there, we could have got that move, but it's obviously not ready. Now, a lot of times that this is actually potentially can be a bullish situation. A couple of things to take into consideration here. It's good because if we did bounce back up here, it would have allowed the moving averages to kind of flatten out. But there's also the worry, not the worry, but the magnet effect that the price may want to come down here. You know, we had this large selling down here, and maybe price wants to come down here. The issue is with that. I go to 6 month. Well, you can see here where my alarm is, right? Well, look at my alarm. My alarm is sitting slightly above the opening price of the 6 month candle. Okay. Now, ideally, we want this to hold, right? Ideally, we want that to hold. So if I bring you back to the daily chart here, you can see that the opening price for the 6 month chart is just somewhere sitting below there, somewhere like that. So it's still a possibility that maybe it wants to come down, barely take that out, hold the 6 month open, and then make some sort of move. Okay. Now, so what I mentioned here, if we break back inside the 4-hour apex, it's a very bullish thing. If it happens, of course. If it happens. Now, I want to talk through that because it's definitely a possibility. Now, when you move up, the fact is that the moving averages are still too. This was always the worry, that the moving averages are still too steep, right? The steepness is not good, because obviously it's very hard to capture moving averages when they're very steep and trending down. Now, what happens is sometimes you get that dip, and then you push back up inside, and kind of try to break out to the upside. Okay. Now, if I take you back to just before the coronavirus crash, was probably the last good example of this. You probably could talk about here as well. Actually, I could mention here right before the bull run, when price. It's not a great example, but price tried to move up. We did get inside, we dropped back out, and then came back in. That's not a great example. It's a very whipsawed example. This is probably a better example. When we got this crash, price came up and we rolled along the white 100 moving average, but we rolled away. See, we rolled away here from the white 100 moving average and never broke into, well, there was a fake out inside the white 100 moving average, and then we rolled away. We actually came down, we stop hunted the lows very, very briefly, and then pushed back up. And we pushed back up, we came back inside the apex, very choppy, small apex, and then we moved into that kind of, well, I mean, from the lows to the highs, it was a 60% bounce in Bitcoin, and then we rolled over into the February crash, March crash, is it? 12th of March, in the coronavirus crash. Now, if you look here, the steep drop and the steepness of the moving averages, right? Look at that white moving average. It's very steep, and it needed more consolidation for the moving averages to flatten out. And the dip and the bounce back actually caused the moving average to flatten out. So the dip is actually a good thing in theory, right? The dip is a good thing. Also here, right? The moving average is very steep. What happens? You fake out inside and you get another dump, and then you come back inside. So there's two examples. And then the longer prolonged period in that consolidation. But the dump was the place to buy. Okay. And if I take you back to today's video, right? It's pretty similar in nature, right? The moving average is very steep to the downside. Price is unable to capture straight away. That's very normal, and it was always the worry. And the dump, wherever this dump ends, a stop hunt here would be absolutely magnificent. I've got my alarm set here now for weeks, probably maybe not weeks, but it feels like that at this point. If we could get that steeper dip, it would allow these moving averages to bottom out, and we could then move back up, because this is the 6 month opening price of well, it's a 1 month open, it's a 3 month open, 6 month open, and it's the yearly open. Don't forget, it's the yearly open also. So in theory, this alarm down here, this area should be a very, press the wrong one, should be a very powerful level. Okay, look at the yearly chart. It's also a yearly open, right? That's in theory not going to be very easy to break. Okay, so the chances that we get a bounce from somewhere in here is pretty high. At this point, it's about a 10% dump down to the yearly open area. Now, one thing to consider, we are still red on the 3-day chart. This is not going to change. Okay, it's not going to change yet. So there is 15 hours left, right? There's 15 hours left in this. So I'm getting itchy fingers to start buying a lot of stuff because the bounce could be, the lows that are going to be put in could be sharp and fast. But as you can see here, for example, right? If we look at here, it's just an example, and you can see sort of here, or even here, like the buy point is on the new 3-day. I mean, there was a dip here on a new 3-day. We flipped out, turned bullish. We came back down, but the dip for the end of it before the move up was actually a new 3-day candle. This 3-day candle is still red. So I'm just saying that there's no real need to FOMO here. It's been a tough week sitting on my hands trying to find the safe buy and the safe entries. But the two options that we have at this point in time is maybe if we flip green on a new 3-day, or is this going to keep dipping to stop hunt the yearly open and then move back up? I will be surprised if we flip red on the year and continue to dump straight down. I'll be very surprised.